concept as well as problems on cost of equity. What is the cost of debenture? KD. What is the cost of preference shares? KP. What is the cost of equity? KE. Remember, if you go for normal one, you will get 18%. If you go for 160, you may have confusion, sir, how come it is 13.9? I got 0.13, multiply with 100. Hello everyone, this is your Adarsh sir, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. So we are in the session 7 of your topic called Cost of Capital. Now, so we have completed your cost of debentures, cost of preference shares, and now we are into cost of equity shares. Almost we are in the end of your cost of capital, so that major we have 3 costs, which are one will be your debenture, preference, and the final one is your equity shares. Now, so we will find out how to calculate your equity shares, as well as it is the easiest part. Why? Because there is no interest, no taxation, and there is no redeemable and irredeemable. Equity shares always we call it as irredeemable. Irredeemable means what? Non-repayable. Equity shareholders are also called as owners of the company. Why they are the owners of the company? Means they are the major shareholders, and so whatever they have invested as an equity share capital, the company will not repay them unless and until company going to wind up. Again, I'll repeat, the company will not repay them unless and until the company will close. When the company is going to close or wind up, at that time the equity shareholders will get their money. Now, what equity shareholders will get? Equity shareholders will get their dividend. They will not get interest, they will get dividend. The dividend rates are not fixed always, but for preference shareholders, dividend rates are fixed. These are the small differences we have between equity as well as preference shares. The first part as well as agenda, you know that what will be the agenda? Concept as well as problems on cost of equity. Concept as well as problems on cost of equity. First part will be called as format. Under format, what will come? Cost of equity capital, we call it as KE, cost of equity. What is the cost of debenture? KD. What is the cost of preference shares? KP. What is the cost of equity? KE. We call it as cost of equity. Now, no growth dividend. In equity, we have a new concept called growth concept. So, growth will be added to equity shareholders. If there is no growth, if there is growth. 2 types of formulas we have. One with growth, one without growth. Now, no growth dividend. The formula will be D. D stands for dividend divided by, you can go for net proceeds, you can go for maturity price or market price. Now, out of these two, any one, whatever information available in the question, we can go for that. One will be market price, other one will be your net proceeds. And the same formula, we will add growth plus growth. Do all the calculation, whatever answer you got, for that you add growth percentage. This is all about your equity shares calculation. 2 formulas we have. Easiest formula, dividend divided by net proceeds. The first part, again dividend divided by net proceeds, and plus your growth will be added. Now, remember, growth is separate one. After doing this calculation, you are supposed to add your growth percentage. Now, cost of equity is another important component of capital structure, where cost of retained earning is equal. Cost of equity is another important component of capital structure, where cost of retained earning is equal. What does it mean? Now, in the first session already I explained you what is cost of capital. about. Now, as I told you, cost of capital means very simple in this. Cost of capital. In the first session, I have explained you everything. Again, I am repeating this. Under cost of capital, you get KD, you get KP, you get KE, and your retained earning. Now, what is cost of debenture? We calculated, you know that. What is cost of preference shares? You calculated and you know about that. What is cost of equity? We are calculating now. You will get to know in another 1 or 2 sessions. Now, retained earning means what? Retained earning means whatever profit you have earned. Like last 3 years back, my profit 2017 I got 10,000 profit. 2018 I got 20,000. 2019 I got around 30,000. These are my profits. Now, out of 10,000 I saved 2,000. Out of 20,000 I saved 4,000. Out of 30,000 I saved 4,000. Total my savings are 12,000. What is my savings? 12,000. Now, this every year, whatever you have earned, earning means whatever you have earned, retained. Out of 10,000, 2,000 I retained, I saved. Out of 20,000, 4,000 retained, I saved. Out of 30,000, 6,000 I retained, means I saved for myself. Now, these are called as your savings. Now, hope you understood what is this about. So, retained earning means whatever you have earned, in that some portion has to be saved. So, whatever savings you have, that also you can invest in your business. Is there any charges for that? Have to pay any interest or dividend or anything for them? No. Why? Because it is your own money. But for calculation purpose, you have to show them cost. How do you show them cost? Whatever you calculated for equity, same percentage will be applicable for your retained earning. Clear? So, under retained earning, we are not supposed to pay any interest, any dividend, because it is your own money. Still, we have to show cost. How to show? Whatever calculated for equity, if it is a 10% for equity, same 10% applicable for retained earning also. Hope you are clear. So, this is all about your retained earning. Now, so hope you know the formula. Dividend divided by net proceeds will be your formula. If you have growth, means remember, dividend divided by net proceeds plus growth will be your answer. So your problem number 1 in equity, cost of equity, or else your overall the problem number 13. Now, X company has equity shares of rupees 10 each. What is the value of share? 10 rupee. Now, the dividends declared during the current year is rupees 2.5. You got that. What is the dividend? 2.5. Before you start your problem, what you are supposed to do? You have to write down the importance. Like we want D, we want NP. Dividend is 2.5 and NP is how much? 10 over 2.5 divided by 10. You got 0.25. I want answer in percentage. What can be done? Remember, multiplied with 100, you will get answer. 0.25 into 100. Your cost of equity. Cost of equity is 25%. Any doubt? Hopefully, no doubt. What is your cost of equity? The cost of equity is 25%. Hope you understood. I'll go for the next one. The cost of equity is easy like this only. Only the growth will add. Other than growth, everything is same only. There is nothing like your MP minus MP divided by number of years, then whole divide, MP plus NP divided by 2. Those kind of problems will not be there. Why? Because equity share never be redeemable. Equity shares never be repayable. That's why the formulas are very short as well as small. Second one, we will only work out this. Now, A company gives the following information. The dividend per share are the current year is rupees 12.5. What is the dividend? We have 12.5 in this. Find out the cost of equity if. Now, there are three questions we have. Question number 1, question number 2, question number 3. We are supposed to calculate the cost of equity for all three. How do we calculate? We'll go for this. Now, you know the formula. What is the formula? Formula is cost of equity divided by net proceeds. These are your formula. Now, so we are supposed to do for the first one. We are supposed to do for the second one. And we are supposed to do for the third one. First, second as well as third. Now, book value in this, your dividend is 12.5. It is common for all. It will not change. Now, your dividend is what? Your formula is dividend divided by net proceeds. Dividend is 12.5. Dividend is 12.5. Dividend is 12.5. Hope you understood. So, dividend is common for all. Now, I'll do some working note. Your dividend is 12.5. It is done. Now, for the first one, second one and the third one, what will be your NP? What will be your NP? What will be your NP? Working note. I am doing working note for all three. What will be your net proceeds? I'll go for the first one. Book value is rupees 50 for first one. What is the book value? It is 50. Now, per share with 10% flotation. Flotation always add or minus? Minus 10%. 10% means how much it is? 50 on that 10%, it will be 45. What is the first one? 45 rupees. Now, I'll go for the second one. Book value is 50. Write down 50. Per share with 5% discount. Same procedure. Again 5% discount. It is 5 rupee. This will be how much? 45. 50 per 5% discount. Over. Next. The net proceed will be same as it is 45. Then the market price is 70. Find out the cost of equation. Any changes? No. Market value is 70. So as I told you, you can go for net proceeds or else you can go for market price. What is the market price? 70. So go for 70. Everything I multiply with 100 because I need answer in percentage. What is your answer? What is your answer? And what is your answer for the third one? I'll check now. So 12.5 divided by 45 into 100. This will be 27.7. 27.7%. Similarly, 12.5 divided by 45 into 100. It is 27.77%. Last one, 12.5 divided by 70. This will be around 12.5. 12.5 divided by 70 into 100. You will get 17.8%. Hope you understood. These are your calculation. So, as per first one, 27.7%. As per second one, 27.77. As per third one, 17.8. Remember, your dividend will not change for all 3 years. Dividend will remain as it is. Now, we have done small mistake in this. Book value is 50 and a share with 10% flotation. I have taken 10. Yeah, this will be 25, 2.5. So, it is 5%. It is 10%. Then, there is a small changes. 50 into 5%. It will be 2.5. It will be how much? 47.5. Small correction here. 47.5. 5. I thought both 10% only. So this is 10%, this is 5%. This will be how much? 47.5. So this will be 47.5. How much you will get? So 12.5 divided by 47.5 into 100. You will get 26.31%. Hope you understood. This is all about your calculation. I have done mistake here. It was 5%, but I took it as 10%. But if it is 5%, it must be 2.5. From 50, if you minus 2.5, it must be 47.5. What is your answer? 47.5 will be your net proceeds. Calculate, you will get 26.31. Hope you are clear. I'll go for the next one. Problem number 15. The current market price of equity share is 90. The dividend per share is 12.5 and the growth rate is 7%. How do we calculate? I'll go for this. Your dividend is how much? 12.5. And what is your equity? Yes, net proceeds is 90. These are the informations we have. What is the growth rate? Your growth rate is 7% given directly. How do we calculate this? I'll show this. Now, your 12.5 divided by 90. How much you will get? This will be around 13.88%. So, plus, what is this? 7%. It will be 20.88 or 20.9%. I'll show you the calculation if you have any confusions here. So, what is your formula? Cost of equity is equal to dividend divided by NP plus growth. This is your formula. Now, as per this, what happens? What is your dividend here? Your dividend is as per this 12.5 divided by 90 plus 7%. Now, 7% you keep it aside, only calculate this. 12.5 divided by 90. 12.5 divided by 90 into 100. I got 13.9%. What is this? 7%. Add both 20.9%. This is your answer. Unless and until you complete your problem, please don't add your growth. Complete this. Whatever answer you got 13.9%. For that, you add 7%. Now, you may have confusion, sir. How come it is 13.9? I got 0.13. Multiply with 100, you will get 13.9%. Any doubt? No doubt. Now, I'll move forward. Problem number 16 we have. We'll work out problem number 16. Now, a company issues 1000 equity shares of rupees 100 each at a premium of 10%. 1000 equity shares of rupees 100 each at a premium of 10%. Means 100 plus 10, it will be 110. Now, the company has been paying 20% dividend. On 100, 20%. How much it is? 20. Now, of equity shares holder for 5 years and accept to maintain the same in the future also, compute the cost of equity. Is there anywhere growth percentage? Holder 5 years and accepts the, they have not mentioned growth anywhere. Is there any difference if the market price is 160? Now, you have to do it for 110 and you have to do it for 160. We'll go for that. Your first one. So, what is this thing? Your dividend, your net proceeds, and yes, these two only we require now. There is no growth in this problem. Now, what is your dividend? Dividend, it is given directly. It is 20%. On what value? I'll get 1000 equity shares of 100 each. Now, 1000 equity shares of rupees 100 each. So, it will be almost 1, 2, 3, 4, 5. it will be around 1 lakh. All the calculations should happen on 1 lakh. Now, so in this dividend, what happens? 1 lakh into 20%, your answer is 20,000. Any doubt? No doubt. What is your net proceeds? Net proceeds will be 1 lakh, add 10% premium. So it will be 10,000. Your answer is 1,10,000. Any doubt in this? No. Again, I'll go back. 1,000 shares of 100 each. Multiply, the value is 1 lakh. Clear? Yes. Dividend is 20%. 1 lakh into 20%, it is 20,000. Clear? Yes. Now, the company issued 1,100 rupees each, premium of 10%. At premium, it is issued. So it will be what? 1 lakh plus 10%, it is 1,10,000. I'll go for the first answer. What is the formula? Cost of equity is equal to dividend divided by NP. Your dividend is how much? 20,000. NP is how much? Net proceeds 1,10,000. Multiply, the 100 is common, even though it is not there in the formula, you are supposed to multiply. Now, 20,000 divided by 1,10,000 into 100. So it will be around 18% is your answer. Any doubt? Hopefully, no doubt. Now, I'll go for the next one. If the price is 160, what happens? I'll go for that. 100 rupees price will become how much? 160. Now, I'll go for second one. The dividend will remain as it is, 20,000. We already calculated, it is 20,000. What is the net proceeds? Net proceeds, number of shares 1,000, value is not 110, it is 160. How much it is? 1,60,000. Now calculate this. I'll go for this. Now, your net dividend divided by net proceeds into 100. What is your dividend? 20,000. What is your net proceeds? 1,60,000. Multiplied with 100. What is your answer? Now, if you calculate this, this will be 20,000 divided by 1,60,000 into 100. This will be 12.5. 12.5%. Remember, if you go for normal one, you will get 18%. If you go for 160, you will get around 12.5%. Any doubt? No doubt. This is all about your calculation. I'll go back to all these slides so that you can take a screenshot. So, this is your format for equity shares. So, this will be problem number 13 and problem number 14 with answer. Problem number 15 with answer. Problem number 16, answer part 1, answer part 2. So this is all about your today's session. Hope you understood what is equity shares. So we have done many problems on equity shares. In the next session, we will work out another 3 to 4 problems and we will wind up with your topic called equity shares. Thank you.